But let's talk about macros. The big economic indicator this evening, inflation easing in the month of August to 6.8%. This is better than estimate, but prices still remain above the Reserve Bank's tolerance band. Food inflation has cooled to single digits, while industrial output has accelerated 5.7%, which is higher than expectations. Lata's here to take us through the inflation fine print. Lata, relief coming in.
It's the pleasantest set of data that markets and the economy and the policymakers can expect. Growth is a little better than expected in terms of the July industrial output, but more importantly, inflation is a little lower than expected. At 6.83, it's a good, 25 basis points lower than what our poll threw up at 7.08. The July number, 7.44. So it's like over 60 basis points lower than the July number, the inflation for August. So this will be greeted by markets and by the policymakers as positive. What has helped this lower than expected inflation is basically vegetable prices. Vegetable prices were 37% higher year on year. This time they are up about 26% year on year. But there has been a fall in August over July. The negatives from the inflation number is that cereals are higher. Cereals are still up about 11.85% and pulses are up over 13%. So those will be the two negative points, negative takeaways. The overall food inflation has come down from 11.5% YOY in July to 9.94% in the month of August. The fact that there are two sticky elements, pulses and cereals, are still double digits and quite firmly in double digits is going to worry policymakers. You will continue to expect the Reserve Bank to keep liquidity tight. Even now, the call rate is slightly closer to what you call the MSF rate. It's not at the repo rate because liquidity is tight. It will get tighter because advance tax payments only will gather steam as we get to September 15th. So you are going to see a cautious central banking activity, keeping liquidity tight. But overall, the number is better than expected, and core inflation, which the central bank tracks very closely, has come in at 4.85, lower than the 4.9 in July. That also will be good news for both markets and the policymakers. But nothing is going to change on the ground. Bond markets still will be captives to liquidity tightening by the central bank. That's the word from the experts. Quickly on industrial output at 5.7% is better than our poll of 5.2%. And what's clicked over there is electricity. Electricity at 8% is a very good number. Manufacturing just 4.6. Within manufacturing, consumer non-durables has done well. It's usually the informal rural sector that's come at 7.4, which is good. But consumer durables has not done well. Consumer non-durables is good largely because of base effect. But overall, the message is positive, both for stock markets and bond markets. Inflation lower than expected should cheer both markets. Growth slightly better than expected should definitely cheer the stock markets.
Yes, it definitely is a cause for cheer. Lata, many thanks for joining us. And speaking of inflation, global